for those of you joining us here today. Just take a few minutes of your time, and appreciate you giving us your ear. We'll take a few minutes to go through what we have in store for the week and what you might expect in terms of rates and what could impact us this week. And those of you joining, again, lines are on mute, and you'll be able to engage through the chat log if you have any questions through this. But again, for those of you who aren't familiar with us, most of you are here on this call, through our accreditation program, a lot of things have been enhanced over the last few months. Be sure to stop by and check out the website. And Josh has that page listed here, but all the benefits, and there's been so many more great things that we've added to the menu. And with us, the accredited advocate program could attest that it's very, very helpful in helping them with a lot of different things besides just the accreditation program itself. So be sure to stop by and check that out. Let's take a look at what's ahead this week. So we have already today we had some data that was fairly impactful for the market, and it really falls in line with the data we've been getting, which you wouldn't know by the action on the stock market over the last few weeks. Has looked as if the data has been bad, but generally speaking, corporate earnings have been coming in fairly strong. Everything has looked good. We had a very positive, much more positive GDP than was expected, and so you're seeing things come in fairly strong, and you're probably wondering what the heck happened to the stock market. And a lot of that has to do with some concerns and sovereign debt issues. Certainly, the stock market was a little technically overextended, and so you probably saw some of that. But again, today we got more positive data in terms of personal income, personal spending. Came out this morning. ISM Manufacturing Index was very strong, and so today, if nothing else, you're seeing the stock market rebound a bit off technical. It was technically short-term oversold, just as bonds in the short term, if you've been following our newsletter, have been technically overbought, and we're due for a little bit of a retracement here. But we're not too far from resistance levels at the moment. So even the slide in rates today, where we stand, we're still slightly improved over Friday morning. And we don't see, even if the stock market took off here to finish the day in the last hour, we still don't see losing much more than an eighth if things got really bearish on bonds today. But so tomorrow we just get one piece of data. So we're looking, by the way, so look ahead here, everything's going to really be building towards Friday with a breather or piece of data on Wednesday that'll give us a view perhaps on how Friday looks, but we've got that employment report coming up on Friday. And so traders of equities and bonds will certainly be positioning ahead of that. But Tuesday we'll get pending home sales. As you saw, the home sales data last week was not great for housing. It was certainly helpful in terms of bonds and keeping mortgage pricing kind of steady and where we're at. But we'll get that data tomorrow at 10 o'clock, and everything you see here is Eastern time, so it's 10 o'clock Eastern tomorrow. And so we'll get one event tomorrow, but look for, stock market, again, just so you know, the stock market has kind of built up this rally on Mondays over the last several months. They've been, in fact, calling it Mutual Fund Monday. So there's been a lot of flows into equities and out of bonds, typical for Monday. So it'll be very interesting to see what kind of follow-through we get tomorrow on the stock market, and even, frankly, during the last hour of trading here. To kind of dictate where Tuesday might go. But Wednesday certainly will be dictated by, right out the gate, we'll get the ADP employment estimate. That is at 8:15. And that will be highly watched as a potential gauge to what to expect for Friday. Again, everything's going to build towards Friday for non-farm payrolls and the unemployment rate. But you'll want to watch that closely, because Wednesday they'll be able to get a feel for, based on the ADP private sector employment data, there's some pretty decent estimates they'll be able to make off of that as to what Friday might look like. And so sometimes when Friday comes around, it's a non-event because you've already been able to kind of peer under the tent with the ADP data on Wednesday. So watch for that. And then certainly 10 o'clock on Wednesday, the sister report to the one we got today, which is ISM Manufacturing, we'll get ISM Service, and markets will trade off that even heavier than they do the manufacturing data, as the service sector makes up, consumers make up 2/3 of GDP. So they're really looking for service data as to how to trade the markets. So we'll get that Wednesday as well. So Wednesday could be a big day. And then Thursday, we always get the weekly jobless claims, and that that number can be a little volatile, and so that can certainly impact pricing on Thursday. Stay tuned for that. We'll get factory orders. Not anticipated to be much of a market mover, but it is a data point that will be watched. And then again, everything will build towards Friday, so we'll get the employment report. You'll definitely want to be positioned ahead of that, depending on how your portfolio or your pipeline looks. But at 8:30 Eastern, non-farm payroll is expected to be up slightly, and the employment rate is expected to hold steady at 10%. And so watch for that. Again, everybody but stay tuned and watch our daily newsletters as we see things positioning up for that week. And then also don't lose sight of Friday afternoon. Could be interesting, and we normally don't list. I think we usually list the consumer credit number kind of as a sidebar because it is a data point, and it's listed moderate here. But the last few times, it's actually, when the data point has come out, it's been so disparate from the view that it's actually had an impact. Consumer credit is expected to, again, retract by $9.5 billion. Get that number on Friday. The last number that came out actually was double the estimate, and that actually had an impact on the market. So you could get a late twist here Friday afternoon, but we'll keep an eye on that for you as well. So really the composition for the week is really look for, we'll get our data tomorrow for pending home sales. Certainly interesting number, and housing having a lot to do with recovery will be watched. We don't expect it to be a huge market mover, but it has the potential to be. Certainly watch for Wednesday. And from Wednesday, you'll want to follow us and follow others in terms of what that ADP report is perhaps suggesting for Friday. Because if Friday is widely different than it's expected, it could swing markets either way. Of course, you're looking for, for mortgage pricing, you're looking for improvements in mortgage pricing, then you're looking for an unemployment rate that would be slightly higher than 10%, or non-farm payroll increases that would be outside of the 13K. And that's what we have for the week. Looks to be, again, a pretty busy week, pretty volatile week. Today has started off that way. Again, here, just we're looking for tomorrow for follow-through in the stock market, which would influence bonds, of course. We will hit technical resistance if we lose about another 8 in pricing. So we look for that to hold. If it does not, then that means the stock market would be off to the races as well, which is also sitting right at technical resistance level. So all traders will be watching how we finish the final hour stocks. And watch, if you follow our newsletter, follow the pivot point of 1,085 on the S&P to determine which direction stocks are likely going. And interestingly enough, as we speak, it sits at 1,085.25. So as it's made it back to that pivot point, you'll be watching for it to hold that, to follow through tomorrow. If it does not, stocks could be declining again later this week. But stay tuned. We appreciate you joining. And again, stop by the website and certainly